Hey, welcome back to the channel, guys. In today's video, we're going to talk about the NACA loan program. We're going to talk about the requirements and how it could benefit you and how you can utilize it to buy your next property or your first property in most cases. So without further ado, don't forget to like and subscribe and comment below. Let's get started. So, what is the NACA mortgage program? Well, first off, what does NACA stand for? That's the Neighborhood Assistance Corporation of America. It is a non-profit organization that provides affordable homeownership opportunities to low and moderate income borrowers. This program has been around since 1988, but I believe this program has gained traction and it's gotten more out there, more recently. So let's talk about the requirements, right? What are the benefits of this program, and what is it? How do you qualify for it, and how can you as an investor utilize this program to purchase your first investment property? All right. So, what are the requirements for a NACA, right? So, first off, let's look at the benefits, right? What are the benefits? What are the key attractions that make this a very attractive program for investors or first-time home buyers? Well, number one, it has a no down payment requirement, right? The program allows borrowers to purchase a property for no down payment, which is crazy in this day and age, or in this, in 2023. There is no program out there like it. You can purchase there may be some introductory or some no down payment programs some different banks have introduced lately in a very certain markets of the country, but this is available in most markets in multiple states, and it provides no down payment. So, which is a pretty interesting, opportunity for first-time home buyers and real estate investors that are just trying to get into the real estate investment game, right? Another benefit is that it provides a below market interest rates, right? The interest rate that it provides, it's actually below market rate. So you're getting not only a zero down payment loan, but you're getting a great rate with this program. The other great benefit to this program is that it provides no closing costs. It requires you to have no closing costs to bring at closing. So not only is zero down payment requirement, but also no closing costs. So for guys, if you're familiar, closing costs could be as much as 3% of the property, right? 3 to 5% of the sales price. So if you're buying a $200,000 loan, $200,000 house, and the loan is $200,000, then you're looking at a closing cost to be anywhere from $6,000 to as much as $10,000. So you're saving that in addition to not having to put down payment. Another benefit, it has a very credit score flexibility requirement, which means that the NACA program does not use traditional credit scores to determine your eligibility. So typically most banks require you to have, even for FHA, it's like 580 is the minimum credit score. For conventional, it's at, I believe, 620 and above. For NACA loan programs, there's no set credit score requirement. They look at different, they evaluate your whether you're worthy to loan by looking at your overall financial situation, by looking at your payment history, your debt to income ratio, and your savings. So again, another great benefit to this program. And then finally, they provide a home buyer education, right? So they do require, similar to FHA, that all borrowers complete a comprehensive home buyer education program before you purchase your house, which is a good thing, a good requirement to have, because this will allow any potential buyers to be educated about the mortgage and the home ownership process and responsibilities. So this is a great way to learn about topics such as budgeting, credit repair, and home maintenance. So another great benefit to this program. All right, So what are the requirements that eligibility requirements that they have? They most likely have three main requirements. One is income requirements. The borrower must have a steady source of income, and their household income must be below the median income for their area. And then if their income is, I believe, equal or greater than the median income in their area, then they would have to purchase a property that is valued at 100% or less than the median price of the properties around the area. So the other requirement that they have is credit history, right? While they don't typically look at your credit scores, they do want you to have positive payment history. And you have demonstrated that you have the ability to repay loans. So they'll look at different other ways to determine that. They'll look at your different payment history on other loans and other obligations that you have. And then finally, the property requirements. So the property being purchased must be your primary residence, right? You can't buy this as a second home or an investment property. In fact, they don't want you to have any other loan under your name or any property under your name. So if you already have a property, whether it's FHA, borrowed money, or just you own the property outright, then you won't qualify for this, right? So they want you to be a first-time home buyer. That's the target for this program. Now, again, like I said, it was similar to FHA. The way you can utilize this program as an investor is you can buy a multifamily property, right? Anything 2 to 4 units is considered residential and does qualify for a NACA loan program. So you can buy a duplex or a triplex or a fourplex, and you can live in one unit and rent out the other units, and then that way now you can have income coming in from those rental units, right? Whether that's going to pay off your mortgage and just you can live there for free, or you're making enough where you're not only paying your mortgage but also making another positive cash flow. That's another key benefit to this, right? And unlike the FHA where they only require you to live in the property for a year, with NACA they do require you to live in the property for the duration of the loan. So as long as you have the loan until you sell the property or refinance the loan, you are required to live on that property, right? So again, ways to use this as your first investment property is to buy multifamily property, right? And you can go ahead and benefit from this program while at the same time owning your first investment deal. This is a great deal, guys. I would highly recommend you look into this. This is a game changer for a lot of people that are trying to get into real estate and they don't have a lot of money to put down, don't even have money for the closing costs. This is a great program to look into. So highly recommend for all the folks out there, look into this program, do some more research. If you have any more questions or if you want me to do any follow-up videos, comment below. With that being said, thanks for watching this video again, guys. Don't forget to like, subscribe. Until next time, take care, guys.